Hello everybody, this is Lara with your end of the week video for gold for the trading week ending Friday 27th of November. The wave count's starting to get a little bit clearer and we've had a price has broken and closed below support and we've got downward movement with some push from volume. The Elliott wave count is, I have two, one is very bearish and the other one is reasonably bearish, but for the bigger picture that one's still bullish. Let's jump into it at the weekly chart level. This is the first wave count. I'm going to label them first and second and not try and pick a winner. I want price to tell us which one is correct. This first wave count, the bigger picture is bearish. This wave count sees gold in a huge expanded flat correction for a huge fourth wave. To see how that looks, you need to look at monthly charts, and I link back at the beginning of every text article to the monthly charts, and there should be a video there for you. Although I think this time I didn't update with a video, I just updated with charts. This structure, A, B, C, expects C to move below A to avoid a truncation and a very rare running flat. Within an expanded flat, B moves beyond the start of A. So the start of A had that prior all-time high for gold, and this is the end of that big bear market that ended in December 2015, and here we've got the last all-time high for gold. So B made a new all-time high, that's what expanded flats do, and then C is expected to move below A. They are huge wide-ranging movements which with overshoots of resistance and support, or another way of looking at them, huge wide-ranging movements moving sideways in an ever-expanding range. Here's a really good example on the weekly chart here. Primary B here is an expanded flat. A, B, C. B moves beyond the start of A, and then C moves beyond the end of A. Sideways movement in an ever-increasing range. I expect the same structure may be unfolding at the monthly chart level, and now just in the very early stages for supercycle wave C down. I've calculated a new target for you for supercycle C to reach 1.618, the length of supercycle 1 at 657, and it may take many months if not years to get there. Within supercycle C, no second wave correction may move beyond its start below 2070.78. At the daily chart level, we're looking at the beginning of this downward movement now, and I'm labelling it an incomplete primary wave 1 within an incomplete cycle wave 1. So far, intermediate waves 1 and 2, minor waves 1 and 2, minute waves 1 and 2, and now minute 3 may be nearing its end, and then we'll have a fourth wave for minute 4, which must remain below minute 1 price territory. More downward movement, possibly very strong, for minute 5 to N minor 3. If this target is wrong, it may not be low enough. And then a bounce or consolidation for minor 4, which must remain below minor 1 price territory, and then more downward movement for minor 5. Gold, when it has bearish movements, will typically exhibit very swift and strong fifth waves. That tendency is especially present or prevalent for its fifth waves to end third waves 1 degree higher. And so any one or more of minuet 5 to complete minute 3 1 degree higher, or minute 5 to complete minor 3 1 degree higher, and or minor 5 to complete intermediate 3 1 degree higher could be particularly strong downward movements with volume spikes ending with selling climaxes. A selling climax in a bear market, despite the name, the word climax, isn't necessarily or isn't actually usually the end of the movement. After a selling climax, you'll typically see a little bounce or consolidation, and then downward movement will resume with usually a little bit less strength. You can see more than one selling climax along the way down within a bear market. If my target for minor 3 is wrong, it may not be low enough. I expect the middle of the third wave may have passed. I'm expecting strong and extended fifth waves to bring this bearish movement for intermediate 3 quite a lot lower. For the short term, minuet 4 may not move into minuet wave 1 price territory above the short term invalidation point, When primary 1 is a complete 5-wave structure, then a big multi-week, possibly even multi-month bounce for primary 2 may not move beyond the start of primary 1 above the all-time high for gold. 2 channels in this chart. This is an acceleration channel which needs to keep being redrawn as price continues lower. Draw the first trend line from this low here to the latest low, and then place a parallel copy up on this high here. When intermediate 3 is complete, that will be a channel drawn using Elliott's first technique around the impulse, and then we'll use the upper edge for resistance for intermediate 4. Here's an Elliott channel drawn around the middle of the third wave, from this low to this low with a parallel copy on this high. If you're using hourly charts, copy that over to the hourly chart. At the daily chart level and at lower time frames as well, use the upper edge for a possible final resistance for minuet 4, although minuet 4 may actually end about midway within this channel. At the hourly chart level, here's the high of subminuet 2. You can see that labelled at the daily chart level. Subminuet 3, 4. Subminuet 5 could be over here. It also could be moving lower. If my labelling here is wrong, it may be in labelling minuet 3 prematurely over. It could step down a little bit lower before minuet 4 begins. When minuet 4 begins, it may not move into minuet 1 price territory. I will expect it to be relatively brief and relatively shallow in comparison to its counterpart second wave, because that is a very common tendency for gold's fourth waves. Not always, but almost always that's how it unfolds. Not always, I mean it could be deeper, it could be longer lasting, but if we expect the most common tendency, then we'll be right more often than we're wrong. We will still be wrong sometimes though. We have to be flexible and accept other possibilities. The target for minute 3 is for it to reach 1.618, the length of minute 1, and a strong caution about this target. If that's wrong, it's not going to be low enough. We could see a very strong minuet 5. This target could be blown. We could see quite a lot of strong downward movement below it. If price does move below it, I'll be quickly calculating new targets for you. At the daily chart level, this is an alternate wave count. It has a really low probability and it looks so wrong in terms of Elliott wave. This is probably the last time I'm going to publish it now, and it doesn't have support from classic technical analysis. I'm just publishing it really just to show you why this invalidation or confidence point is so important. If primary C is not over, and this is just a fourth wave correction within it, then 4 can't move into 1 price territory. This is cash data. I will now allow no overlap. A new low by any amount at any time frame invalidates this idea, and that's why we can have further confidence in the main wave count. If we see a new low by any amount at any time frame, a fraction of a cent on a tick chart is enough to give us confidence in that first wave count, because it invalidates this idea. The second wave count, the bigger picture is bullish. It sees this big bear market for gold, which ended in December 2015, as over, and a new bull market beginning there. If a new bull market began there, we have to see off the lows a 5-wave structure complete. You can't see it over here, so I'm going to see it over here. 1, 2, 3, 4, 5. A 5-wave structure, I'll label cycle 1, could have been complete there. The correction to follow it should be a second wave correction, and this may subdivide as a double flat correction, and a third wave may be over here for cycle 3. Cycle 4 may continue for months, and it may not move into cycle wave 1 price territory. So this structure is important now as to where we label cycle 1, whether it be here or here, and in Elliott wave terms it has a much better fit here, and this is more conservative in terms of an invalidation point. If we see a new low by any amount at any time frame, then this much more bullish Elliott wave count would be invalidated, and the more bearish idea, which has that very low target, would then have a lot of confidence. So this is also going to be important going forward to identify the difference between these two wave counts, and that's one really neat way we can use Elliott wave rules with alternate wave counts. This looks like a really good third wave, and it has a little bit of a curved look, quite typical of gold's third waves. If the second wave correction was a double flat, then the fourth wave is most likely to be a zigzag, and that is by quite a wide margin the most common corrective structure. The problem in terms of Elliott wave with the subdivisions of this wave count, and I had it as an alternate for a long time, but I'm not going to try and pick a winner. I'm going to let price now tell us which one is correct. But there's a problem in here for the structure of cycle wave 2. This is labelled as a double flat correction. Here's the first flat in the double, labelled primary wave W. The double is joined by a 3 in the opposite direction, labelled X, and the second flat in the double is labelled primary wave Y. Each of primary W and Y are labelled as simple ABC structures, as they must. You cannot label multiples within multiples. The Elliott wave rule for multiples states the maximum number allowed is 3. To label multiples within multiples increases that beyond 3 and violates the Elliott wave rule. But the problem is in here for primary wave W. An expanded flat ABC, C has to be a 5-wave structure. 1, 2, 3, 4, 5. We're ignoring what looks like an extremely obvious triangle in here, which we can see this movement as a triangle for the first wave count. So that has a higher probability in Elliott wave terms than the second wave count. Triangles are not the sole corrective structure in a second wave position, so we have to see it as a series of overlapping first and second waves at the beginning of this third wave. And it just doesn't fit at this time frame, nor does it fit well at all at lower time frames. It's a long, long way away though. This is back in 2016. This is the little key between these two wave counts. But I'll keep going over it because it's actually quite an important Elliott wave point. At the daily chart level now, for this wave count, I expect cycle 3 is over here, cycle 4 beginning. I'd expect it to unfold as a zigzag. The probability of that is much higher than another type of corrective structure, and a movement at cycle degree at the daily chart level should have a pretty clear 5-wave structure down to begin it. We don't have that complete yet. We've got 1, 2, and a developing third wave. We'll have 3, 4, 5. For the short term, this wave count at the hourly chart level looks exactly the same as the first wave count at the hourly chart level. So there's absolutely no difference, and there'll be no difference between the short-term targets, the short-term invalidation points, short-term channels, all exactly the same. At the weekly chart level this week, we have an important close below support. Support was previously 1800, and now I expect that area will provide resistance. Next support at the weekly chart level, about 1675. This week included Thanksgiving, but there is a slight increase in volume from the previous week, so we'll say there's a little bit of push from volume. We don't need for breakouts to the downside to see support from volume, but when we do see it, it is impressive. On balance, volume also has broken below support. It's not a strong support line, it's only got about 3 or 4 tests, but it's horizontal and somewhat long held, so that's reasonable. This week at the weekly chart level, the negative DX line crosses above the positive. This is a bearish signal. It tells us there is a potential trend change to down, but ADX hasn't caught up with a possible new trend at the weekly chart level yet. ATR is overall flat as price falls. That sometimes happens for gold at the start of a new trend. RSI is in neutral territory, still room for price to rise or fall. Stochastics entering oversold, MACD bearish but not fully so. At the daily chart level, a little bit of push from volume, closing below that previous important point about 1800. A little bit of support from volume pushing price lower. And this is the day after Thanksgiving, so for it to be a little bit stronger than the prior little upward day, that's impressive. On balance, volume is giving us bearish signals, breaking below support, back test of resistance, moving down and away. RSI is not yet oversold. There's further room for price to continue lower. ADX at the daily chart level indicates a downward trend which is not yet extreme. The weekly chart level may catch up if this trend continues for long enough. This is a strong signal from ADX. ADX is not extreme. RSI is not extreme. There is a downward trend. There is room for the downward trend to continue for gold. That's all for me this week with your gold analysis. I hope all our members are having an awesome weekend.